Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Speaking of Bob, you look exhausted. What's going on over there?
Oh my gosh, Phil. It's just getting more and more insane and absurd. Janet Yellen went to China last week, and all of a sudden, all hell's breaking loose in the currency markets.
Yeah.
And this afternoon, we started getting some really weird activity in the volatility markets. So let's just show people, because what's happening here is Janet Yellen is absolutely a dove on the dollar. Okay, most libtards are. They always want to take the easy way out, inflate their way out of their problems. And something dawned on me when we were seeing this action today. I said, let's bring up the SPY and let's bring up the dollar and let's see if there's any correlation here. And I'm going to show you guys that first.
All right, guys, let's dive into this video.
Trade Genius.
Hey guys, I'm going to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening. Yeah, Phil. So look at the dollar. The dollar peaked on September the 26th, and it's been in various levels of free fall, ever since. And then this week, just another massive dump. And if it breaks support here, it's going down to like $94, $92. And do you have the SPY chart so we can kind of show people the relationship here?
Yeah, they're on top of each other.
Yeah, sorry. You guys, I have to apologize because I can only see one chart at a time here with Phil. So, look at the SPY. And so basically, they've been inflating, but they've been holding back energy and they've been holding back gold. But all of a sudden this week, oil broke out, gold broke out, dollar gets hit hard, the yen's going crazy. And then, Phil, you have the VVIX chart, and I'll let you explain that one. Oh my gosh. And while Phil's getting that one up here, is that, a weakening dollar is okay to a point, and then it becomes problematic. Just think what happened in flash crash. Think what happened in 1987. So I'm going to throw this back to you because you put this chart together and you can talk about the analogies.
Yeah, so VVIX. So what's interesting about this move here? Now we're talking about we basically had a move up from the beginning of the year, right? And what's interesting about this move is that we're seeing the VVIX at levels that you would normally see when we've put in recent lows in the SPX. Okay, so there's this is a 5-minute chart here just for clarity, but these spikes, and this is what's kind of been interesting about this market, is we're getting a lot of things that the market's not reacting in the way that it normally should. Okay, so market should be down farther than it is here, and it's not. So we have to keep an eye on VVIX, because if this continues to spike, then we could have a rather nasty move lower. But I just wanted to kind of show you guys that you have to keep an eye on things like VVIX. And VVIX, if you don't know, is the volatility of volatility. So, VIX is a measure of the volatility when it comes to the stock market, right? Well, VVIX is the volatility of VIX. And what we've been noticing lately is that VVIX will actually give you more of a clue than the VIX itself. So big spike here toward the end of the day. That's something to keep a close eye on, because if that continues to go up, and again, we're only looking back in the last week or so here, but you can see where typically we've had more of a reaction in the stock market than what we're seeing here at these levels. And we may just need to keep an eye on it, because if we keep pressing above that red line level, then that's where things start to get real dicey. And then I think these markets have support up until like 4,400, but we start going below 4,400 on the SPX, that's where, Bob, I think things get really volatile.
Yeah, I mean, look, it's scary, and we have put call ratios. We have the VIX down at the floor, and you got to remember, this information, these derivatives have to go somewhere. They just aren't allowed to go away.
somebody's
Right.
on the other end of these bets, Phil, and it's just like a clock just being wound up, wound up, wound up, wound up, and then it's gonna go. And the thing about VVIX, you're right, VVIX leads, and when VVIX leads and it gets sharp like this, VIX follows, okay? Because when you have a calm VVIX, that's just that slow grind down in volatility that allows the risk managers to let you take more risk on and yada 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 yada. And when it goes spiking like this, then it's a problem. And it's really interesting too. I know it's kind of a bit of a weird segue, but I was literally talking to a friend of mine who wanted to put some money in the market, and I just kept telling him, it's getting a little frothy here. The only thing I would let you probably think about going into would be, some energy names. And I said, why don't you go in with the oil ETF, USO? I mean, pretty calm. They have spread futures contracts, and Merrill Lynch said it was too volatile. So I asked her to call and ask him if she could buy NVIDIA. Now, this person literally has $25,000 in the account. That is the only money she has in the stock market. She hasn't invested one penny yet, ever. Okay. They were protecting her with USO, and they said, sure, you can buy NVIDIA. This is how insane the market is and how everything's just being pumped towards the madness. And when this thing unwinds, the old analogy comes out, Phil, escalator up, elevator down. And I think you have another cool chart too. Is this the pizza indicator?
No, we're going to get to that one in a second. But this one is to get back to the dollar, and we're having a very dramatic move in the dollar, and I have yet to find a really good reason for it. You and I talked beforehand about, it's interesting because the dollar got really weak after Yellen went to China, and we were wondering, was China threatening to dump treasuries, or what was the deal there? And she had to make a quick flight over there, but it was curious that the dollar got really weak after that trip. So I don't know what the shenanigans are. Maybe we'll get more information as we dig around, but the one thing we can fall back on is history. And what we're seeing now is that you want to pay attention when the dollar gets really volatile, because again, it's the global reserve asset or currency, and you don't want that to be just flailing around by percentage points week to week. That's not what you want. That's not what the world wants. And what we found was that as you actually go into a recession, you actually get a weakening dollar into that. And so I do think that that's playing a part in what we're seeing here. We saw this back a couple of times now in our last couple of recessions that we had, .com and the great financial crisis. And the interesting thing was that when we get the elevated Fed funds rate as we have here, right? So we're actually getting back to great financial crisis levels of Fed fund rates. And actually in the .com era, the Fed fund rates were even higher. But when you have a weakening dollar and then that Fed fund rate actually flatlines, so what's key here will be, and I think most people are expecting a hike of 25 basis points in July. But going forward, if they decide to pause in September, pause, on the next one after that, then I think what you're going to get is that flat top look like you've seen the other two over to the left. And that is usually your death nail in these markets, and why we're anticipating the second half of the year to be bearish. And that's been a lot of why we've been posting more bearish macro, videos for you guys, just to give you guys a heads up of what's going on. Not so much the week to week, but more like, the second half of the year. So that's the next thing we got to see, Bob, here. I think we've got recession data coming in. We've got the dollar starting to spaz and weaken, and all we are waiting for here, according to this chart, is just that Fed fund rate to go flat, meaning that they're pausing the rate hike cycle, and that's usually where we see the market start to roll over.
No, I totally agree. Flat top, get out.
Right. And then our final chart is going to be the pizza indicator. And you guys are probably wondering, what the heck, have they lost their minds? But this is more for fun. And what it is there's a quick little correlation of Domino's Pizza relative to market tops. And what you'll notice is that when the rate of change, and that's that indicator on the bottom, so it just measures, like when Domino's does a real vertical move relative to the most recent price action, the rate of change oscillator will spike up. And we're spiking right on up where we were right before the COVID crash. So just something to note, that pizzas might have more power than you think, as far as making you feel full and tasting good. They might also have a predictive power in the market. So we thought we'd share that with you guys. But pretty funny.
It was pretty funny. Wow. Hey, yeah. Too bad we could have been doing it wrong this whole time, Phil.
I know. Should have just waited for the pizza indicator. All right, well, that's going to do it for this video, guys. Let us know your thoughts. A lot of weird stuff going on. Volatility popping higher is definitely something to be aware of. The dollar's being shaky. That's going to create some ramifications around the world as well. So I think you got to be very careful here on your portfolios and keep close watch on these markets. I think we have a volatile next couple of weeks before we see any kind of relief, I think. And the next, like we said, this back half of this year is going to be pretty sketchy. So stay tuned to the channel. We'll keep you abreast of what's going on and all the important levels along the way. Bob, thanks again. We'll see you guys on tomorrow's video. Thanks for watching. Please hit like and subscribe and smash that notification bell and set it to all if you can. And don't forget to check out our stuff at tradegenius.co. See you guys later.
Trade Genius.